Hey, good morning. How are you today? It's, what is it, Wednesday? Trying to find my mouse. Yeah, Wednesday, August the 2nd, 2017. Thank you for being here today at Forex.Today. Good evening from Singapore. Awesome. Yeah, I need to get me out to Singapore. Yeah, thinking about maybe a quick Hong Kong, Singapore trip. Wouldn't that be great? It's funny, the shadow looked, oops. the lighting, I thought I had like a sunburn here and then I was pale there, but it's not actually the case, I don't think. I better take a look. Don't look. Anyways, hey, let me remind you that trading's risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. No, it's just the lighting, and I think it's the angle of my screen way up here in which I actually see the webinar. And everything, it just looks funny. It looks like it's bright white here and red here. It's not really true though. Anyways, it's kind of creepy. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader, and I've been doing this for a very long time. We're now counting decades, not just years. My goal here at TradersWay is to do whatever I can, educationally that is, help you become a successful trader because they want you to trade successfully. They want you to not just survive, but thrive. How nice is that? You can trust me, I'm a priest. I do these sessions 7:30 a.m. Monday through Friday here at Forex.Today. Except for this Friday, it's unique. I will be over at Traders or at FX Street for Trade Non-Farm Payrolls Live. I don't know, 135 months in a row. Could be a trend, huh? All right, let's get serious now. Let's get serious. What day of the week did I say it was? Wednesday? No, Sean, you'll have to go to fxstreet.com and register there. Cool. All right. So what do we do? So we're interested in seeing, well, first of all, let's start with the far right. Yesterday may be the beginning of Mexican peso strength. We know it's the first of the month. That can often lead to strength in the Mexican peso. But we know this week, because of the way that the week is structured on a calendar, this week wouldn't be as good as recent repatriation trade setups, just because the Tuesday, which is the first of the month, is too far from the Friday of the first Friday of the month, and therefore there wouldn't be one big ballistic, move down. And check that out, we didn't get it, but we knew this time it was much less likely than in times past. Maybe you sold up in here and it moved your way for a while. Yeah, only 16 hours, and then it failed. But we knew it was more likely to fail this week than most. Doesn't mean it won't head down yet, or doesn't mean it won't head down. It's just not heading down yet. And there's no reason for it today per se, because we're waiting for the Friday. We're waiting for payday. So good job on being careful on that one. Up to 50, down to 49. Okay, actually 48.50, huh? Back sideways. So how are you going to treat this? Are you now a bear? Because, you know what, let's do it this way. Let's Gartley this. We haven't Gartleyed something in a while, huh? Okay, because this low is lower than the previous low, then one of the things you could be setting up if you're a bear is that this low to this high down to this next low is the next potential move. Okay. You see what I'm thinking here? If that ends up being the case, because this low is lower than that low, you have permission, if you're a bear, to set up a new lower high at a resistance cluster. If that happens, then what's your next move maybe on a currency, not a commodity? What's your currency play? Yeah, you already have permission here, but this is better. And then you can mark this thing up here just in case, but it's less likely. Sell CAD. Michael says USD yen. Or I mean USD CAD. But generally what I believe you mean is CAD weakness. So either USD CAD up, which we've already set up from a double bottom, or CAD yen down, which is also still possible in the month of August. In fact, likely. And how are you going to treat it at this point? You're going to trade it like a breakout? If you're going to trade it like a breakout, then you're in the role reversal buy zone. And you'd want to kick it off to 21 based on yesterday's conversation anyways, right? Okay. Remember, yesterday I drew these blue lines to show you the potential of the upward channel. Then I drew this orange line to show you, the break in downward trend. But of course, it hadn't happened yet, I don't think. I think we were here yesterday. So it broke out of the apex and up and over. So it's more interesting to think about what are you going to do next. Now, you swing traders, how many people have taken the swing trading course now? Where are my swing traders? Chuck, Henley, Adriana, Jean, Ronnie. Oh, the coupon code. Missed it by a day. Email me, Ron. Yeah, Wayne at fxbootcamp.com. Anybody else? Just email me, Wayne at fxbootcamp.com. I'm going to take it down. So, I mean, on the 4th, I believe I announced, and I think that's Friday. So, I mean, literally, you got to do it now, and then I'm taking down the whole summer school thing. So there won't even be a structure for me to give you a coupon code because it's like set up as a product. I'm just going to remove the product. So, so anyways, for those that have taken the swing trading course, this is the trade, isn't it? That's right out of the training course. Oh, but how would you have known? Well, you could have traded the double bottom on Friday. But anyways, it opened perfectly on Monday. And I believe we talked about it here in the webinar as well, to play the double bottom, right? With a stop here and a stop here or something like that. But nonetheless, this bottom predicts a top right in here. And we've had that move. I mean, sweet, right? High five. Boom. Yeah, it's perfect. Well, no, we missed it by 1 pip here. Sorry. Yeah. It was supposed to go to 125.89, but it went to 125.88. Epic fail, huh? Now, what's so important about 125.88 besides the pivot points? Nada. Right. So that's cool, right? There's a lot of warning, even though we've been following this. Remember how it broke below last month's monthly pivots, and we said to be cautious in here. It just kept going, kept going, kept going. Great, great, great. And then all of a sudden, higher high? What? Then the double bottom could be a clue. And now potentially a full-on reversal. We don't know what happens next, but if you're trading it like a breakout, and again, listen to the language. If you are trading this as a breakout, of that being a bottom or this being a bottom, either way, that all of that's support. If you're trading it like we broke through resistance, then you should be preparing to launch now. Little difficult now that we've kicked off the target, because the target says it doesn't have to. Okay, the theory is it may come back to the central. But so you might want to buy it off the hourly 21. You might want to buy it off of this. You might want to buy it off that. Okay, because this goes back all the way to here. But notice that the common denominator here, the LCD, the lowest common denominator, is that you're a buyer. If you're a seller, you need to sell up high. Okay, but if you're a buyer now, based on whatever logic you have, there's a buy zone here, there's a buy zone there, and there's a buy zone there. So you sit and you wait. Remember how I've been trying to teach you that you need to make decisions, and if the market agrees with you, you get paid, and not you trying to figure out the market. Oh, are you supposed to sell here now that it's done that? Are you supposed to buy here to? And you're very inconsistent because you're always trying to figure out what the other people are doing. But if the other people are doing it, then they're in control and you're not. And if you're not in control, you're not the expert. And you're not the expert because you're not the one making the decisions. And if you're not the one making the decision, then why are you at the table? Who are you? Oh, I'm the guy that just sits here and eats donuts and makes no decisions or contributions. You're like, well, why do we need you? Put down the donut and please leave, right? So no, you got to be if you're going to be at the table with the adults, you need to make decisions, right? So in this case, if you decide you're a buyer, then you could say, well, I'm interested in here for various reasons. I'm interested in here in various reasons, and I'm interested here in various reasons. All of the, and there's only one decision to buy. You've made the decision. You're going to buy for whatever the reason or rationale is, but you're a buyer. You know that. Everybody knows that. And now you're waiting. And you said you're interested. Well, you're looking for something here, and if you get it, you're going to go long. You don't know if it's going to happen, but if you get the setup, that's what you're going to do. If it falls a little further, you're like, oh man, if it's falling a little further, I wonder if it's going to zip up here, because if it does, I'm going to take it. Same thing here and here and here. And odds are at least one of these will happen. Now, maybe none happen, but I would say odds are one of these things are going to happen. And your job now is to sit around and wait. And if you take the shot and the market agrees with you, it's going to make a higher high and you're going to get paid. And most of the time, not all the time, or not even most, a lot of the time, if the market isn't prepared to make the higher high, you don't even really get a setup. It just kind of comes down, 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 and you're like, damn it, I wasted the whole day doing nothing. Right? And an amateur would say, oh, if I had only shorted. Well, where were you here, right? And then, of course, you could say, well, if you didn't short here, then what? You want to short near here? That could be dangerous. Where? You want to short near here? Well, that could be dangerous. Okay? Okay? Because even if it's trading as a range, trading in the range is a pretty dangerous proposition. It certainly wouldn't have high rewards built into it. And it potentially has high risk. Life is great. Life is grand. So if this heads up, USD CAD comes down. If this now comes down based on what we just did before, if this goes down, then this goes up. What do you think? No. Wait. No, I got this wrong, didn't I? If this goes down, yeah, this goes up. Right? So you have to make the decision. Is this bearish or not? You got a 3A2, you got a 618, even the 786 works for me. So all you're betting on, per se, let me clear this out, is that it falls here, 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 or here. Where's your stop going to be? Here? So it doesn't even matter if you sell it here, 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 or here, does it? Okay. So all we're interested in is where you pull the trigger, right? Ah, dang it. Hang on. Don't go away. Just had to call the tech team, that's all. There you go. So, decision-making time, isn't it? We're at a 3EA2. This is a possible sell. Up here is a better sell. And it would be great if it came up and then down, and you end up selling about the same. So somewhere between this 49.25 and 49.70 could be a trade. So you're in decision-making mode now. You might trade this as a lower low, lower high now. Oops, if you wanted to. I don't know what your plan is. You might simply wait for the next cycle, sell the next cycle high. Cream says, oh, but it's Wednesday. We got oil inventories in, 2.5 hours, 2 hours, 2.5 hours. Well, isn't that why they invented stop losses? If you can get into a trade profitably and jam your stop before that, then you're hero or zero, right? So anyways, your trade plan might be wait for this. Because what would this tell you? I mean, forget about like, oh, stochastics told me to. No. What is it you're waiting for? The candles have attempted to make higher highs and have made higher highs relative to the most recent ones. But when it gets up to maybe near here, whatever the reason, right? But let's say near here. So it heads back to 49.25-ish. And then it's just failed. It just couldn't make any more higher highs and is now making a series of lower lows again relative to the reason. So all it's doing is this. And that's kind of what you want. Okay. This tells me if you make a full cycle, how many candles is that going to be? Quite a few. Could be an hour, right? So you just, right? Now you might get one of these things where it just stays down here, and that's where you should already be a bear. So that's why you don't wait for oscillators. They're lagging, but they're helpful. So if this starts making lower lows, then that oscillator is going to stay oversold because it will be falling. So you need to make a decision here on how you want to trade it, right? Are you going to use that as the resistance? Okay. The thing is, this is low relative to this high. So that's why you'd set it up as 1, 2, 3. Okay. Making decisions on a 5-minute chart. With a Gartley on a 4-hour chart. Maybe this helps for you to see it. But it could look like that. So you have to make decisions, my friend. That goes down. This goes up. And this is your role reversal. Guess I could even drag this a little lower. Oops. Right. Catch this, this, this. this, this. Guess we got to do Euro USD. Talked about this yesterday. But we are also talking about, setting up the double top before the drop. So it'd be very interesting now if this produces a double top. Because then we go rangy, which is the beginning of an old man trade. Okay? Which could be significant. Which would also point to dollar strength, which would also point the USD CAD up. Okay? So the interesting thing about a trade like this is it either works or it doesn't. There's no sort of like follow-up. Okay. Interestingly, this is the monthly sell pivot, which means you would be short Euro USD for, let's say, most of August. That'd be interesting, huh? I'm not predicting it. It's just this probability, the probability is there as long as that's the top. So if we suddenly get a lower low, lower high, and end this week to the downside, meaning the next week's weekly central pivot drops, then we could have 3 more dropping central pivots. What do you think of that? And you'll say, oh man, I just read that the euro is going to go back to 150. It's the end of the dollar and the huge euro, blah, blah, blah. Oh my God. It's the end of the euro as we know it. Yeah. Is there the same potential in pig, in the pig dog pair? Because you would think in historic correlation, not always this year, of course, or even recently, but usually, a general rule of thumb, if euro dollar's down, pound dollar should be down relatively as well. So the question is there a double top setting up on the pound dollar as well? What an amazing coincidence, huh? That all these things are pivot points. So I'll remind everyone, especially those who are relatively new, these lines, which seem to be the top here, which seem to be the bottom here, which seem to be the top here, they're drawn based on an algorithm that simply makes some calculations based on the high, low, and close of last week's trading period, trading ranges. The high, the low, and the close divided by 3, right, gives you this line here, which to the exact pip created this bottom. Now, was this bottom created for some reason because of the price, because of some last period action, or is it simply people traded that pivot point? And I can tell you over the years, it's become more and more and more self-fulfilling prophecy. And I think it might have to do with the algos, where people just have programmed to buy at the central. That kind of thing. It's neat. Then that means if we know what their algos have coded, then we have power, don't we? Because they don't know what they're going to do. We know what they're going to do. We know what they're going to do before they do it because it's already pre-programmed. It's predestined. Sweet. It means they're vulnerable and we're powerful. Yeah, pound dollar sold in the trial. Yeah, so you should have either had a small win here or have been stopped out. That's true. So Wimpy, then where's the next opportunity as a bear? There's only two scenarios here. Okay, you're selling in this zone or you're selling in this zone. Okay? So what you might be looking for next then would be, wouldn't it be cool if it did this? Okay? See, a bear would have sold this. If you sold this and lost money, that was a great trade. Okay? Okay? Because that's the place where you're supposed to sell as a bear. The reason you lost money is the market disagreed with you. If you were a bull, straight out of the training course, this is the buy zone, and that's the target. Straight out of the swing trading course. Boom. All you had to do is be a bull. So once again, if you trade like you're asking the market to make decisions for you, you're going to be very inconsistent. Okay? Because what happened was a bull said, oh, we opened here. I'd like it to come down to this zone here. This is how tight it is, actually. In here is the whole area. So what happened was someone did this. They said, all right, I'm going to put an order here, and that's my entry. Was there a reason for them to be a bull? Okay. Yeah. So even if you lost money, you lost money simply because your bias was wrong. But if you sold up here and lost money, that was a great trade. And if you keep doing that over and over and over again for the rest of the year, on the weeks in which the market agrees with you, you're going to get paid a lot of money. And then on the weeks the market disagrees with you, you're going to lose a little bit of money. Because you could say, all right, you're seller in here. Now look, if you're selling lower than this, you're not very good. I'm assuming you sold right Sunday morning and you're like, boom, M3, ding, boy, right? So you sold here and your stop's here. Or your stop's here. But probably here. You're really close. Because you're selling in an uptrend. And that's pretty obvious, right? So your stop's pretty close, and you're risking, let's say, 50 pips. But every time you get it right, you make 200 pips. So how many times can you be wrong and still break even? You can be wrong 75% of the time and not lose money. Sign me up for those odds, man. Holy smokes. Like, think about it. Can you possibly, if you stuck with discipline, right, to a particular strategy, knowing that you can be wrong, you can afford to be wrong 75% of the time. Then it comes down to, could you be better than losing 75% of the time? How many people think that they could have better than 25% winning ratio? That it's truly within reason to think you could be better than 25% wins. Okay? Well, then by definition, you're a profitable Forex trader. Thank you, Kareem. Okay? Just like that. Boom. If you're better than a 25% win ratio, you will make money. You just have to consistently do it week after week after week after week after week after week after week. And all of a sudden a whole year goes by and you got 40% winners, 60% losers, and you're profitable? Nice. Okay? But it's because you're not chasing price. Now, bear in mind, you're probably trading on Mondays, and that's your week. What did you do this week? Oh, well, I'm usually done by Monday morning. Like, if it's noon in New York on Monday and I haven't already set, and I'm not done for the week, it's a bad week. Hadir says, kills confidence? No, not me. No. Because I say, like, look, it's not a confidence killer to me because I know it's just I need the market to agree with me. So if I'm selling right here, great. But it's pretty obvious I'm selling in an uptrend. So my expectations are pretty reasonable. Okay? And remember, your clients, they don't care about your win ratio. Only an amateur cares about such an unimportant thing. When I look at a high win ratio, I see someone that does not know how to take losses. And when someone doesn't know how to take losses, one day they're going to be in a losing situation, and they're going to be more worried about their winning percentage than my money. And they're going to make a poor decision, and they're going to lose a lot of my money. It's the last thing I care about. Who gives a damn? How much money did you make me? Yeah, I made 20%, but 70% of my trades were losers. Oh, that's tough. That must have been frustrating. Give me my money. You only made me 20%? Yeah, but 70% were losers. I'm like, yeah, that's really tough. Let me get you a drink. Bloop, 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 bloop. Yeah, some more champagne. Champagne? Over here. Yeah, as long as I got my 20% profit, couldn't give two hoots about your 70% losers. I don't care about the losers, right? All right. What time is it? Yeah, I got a couple, right?
This is a 24-hour live. The release of the July ADP employment change expected 190,000. The prior was 158,000. Historically, do see revisions to this data series. Comes ahead of Friday's non-farm payroll report.
This is a 24-hour live broadcast test channel from the Trade the News broadcast network. If you are hearing this message, your sound card and network configuration are working properly, and you are now ready to listen to our other voice channels.
July ADP employment change to it momentarily. 178,000, a miss of expectations.
Wah, wah, wah. 178, bro.
The prior month revised to 191,000, revised to 191,000 up from the 158, so a big revision higher for June.
Wow. We went from 160 to 190 for last month. Wow. So it's bad news mixed in with good
We
news.
had seen manufacturing jobs decline by 4,000, construction jobs turn to a positive 6,000 from the minus last go around. In terms of the commentary, Mark Zandy saying job machine continues to operate in high gear. Job gains are broad-based across industries and company sizes. Only manufacturers reducing the payrolls, and they expect unemployment will continue to quickly decline at the current pace in a big revision higher for ADP.
Just looking at the breakdown. Small businesses went from 17 to 50. Medium businesses is basically the same. Large business is about the same. So right on for the entrepreneurs. Service sector, 90th straight month of increases. They went from 158 to 154. So I guess hotels and bars, cheap dive bars and cheap motels are making money. Life is beautiful. Look it missed my line by 2 pips. Oh, dang it! La 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 la. Look at that. Skippy scape, skippy scape. So where do you fib from? I usually fib from pre-news, so the candle before the news came out, to the end of the first candle, sort of like what I have here. But that's very, very subjective, Peter. There's no right or wrong way. That's how I do it. Here comes the drums. Said, get ready, because this ain't funny. My name's Mike D, and I'm about to get money. Pulled out the Dixie and aimed it at the sky. He said, trade it up and let two fly. Dollar went up, cat hit the floor. He wasted €2 that ran for the door. I'm Mike D and I get respect. Your cash in your pips is what I expect. So, do what you got to do. What else going on in the world? Let's take a look at some yens. So I'm in at 145. We're at 146.60. So it's just still moving up and not quite 200 pips yet. That's on Beast. Profitable on Aussie. Got the double bottom thing going on. You like them pineapples? Okay. Trading the floor. It's not much of a trade. It's technically profitable. You know, trying to see if we can get this to roll up. Okay. You can see I'm just, the entry is basically the M2 off the bottom. Yeah, might be a survive type trade. Peter, what time frame are you looking at? Euro dollar? Are you on a demo? I don't have any gaps, bro. Must be your internet. Or maybe you're not on TradersWay. Tisk, tisk, tisk. Now you're getting burned, burned, burned. All right. So, yeah, I don't know what you're seeing. I'm right. Smooth as a baby's Botox. So yeah, so here's the beast. I set this up on Monday, so now I'm up 160 pips. So far, so good. But just reminding you of the entry. Easy peasy, right? Let's kind of clear this up. My stop's at break even, by the way. This one I took a hit on. This killed me. Son of a. What are you going to do, huh? Should have shorted it. Yeah. Yeah. And there's one on here that you have. I got one other one floating around. I got to go to Swissy. Don't even have it here. Oh, here it is. Kiwi, sorry. Oh yeah, here's something I kind of wanted to talk about. This one. I've been in since the 18th. So that's 20 days, roughly 20 couple, right? Whatever. And I'm up $11 in interest payments. Doesn't sound like a lot, but I'm only in 0.17 lots. So let's just say I have $170 locked up into that. And let's try to rough it down. Let's say I'm earning like $1 a day. It's because it's for trading day, but it's not quite $1 a day, right? But let's just say it's almost $1 a day. All right, great. Just makes the math easy, and then you can adjust as you want. So I'm in for, I'm making $1 a day, and I'm actually using $170 in my cash to get that trade because I'm leveraged, right? Right? That'd be 101, right? You get it? So I know all of this is not quite right because then you got to do some various calculations. Let's just go with the simple logic. And then you can tweak as you want depending on how real you want. But the message is honest, okay? So let's say I have $170 of cash, okay, put into that trade. And I'm earning about $1 a day, which is not quite right, but whatever. Let's just go with that. So that means at the end of the year, I'll have $365 in payments. What's my return? Roughly 200%. Is that better than your bank account's paying you? Remember, that's not pips, guys. That's not pips. I'm not counting pips. Just in the swap payments. So I know it's not, I'm not getting $1 a day. It's, let's say, but I'm making more than 50 cents a day. But let's say now it's 50 cents a day. So I'm only earning 100% a year in interest payments. Right? Now, I've made $11, but I'm up 300. Okay? But whatever. Let my stops at break even. I can't lose money. Okay? You see what I mean? So now I just forget about it. I'm earning 100%. But what if I'm up 1,000 pips at the end of the year? December 31st, I open up, I'm like, oh yeah, I better close some of these trades for tax purposes, right? I could be up 1,000 pips, couldn't I? If I'm sitting on this all year and I have no intention to take profit, right? I could be up 100 pips. I could be up 1 pip. I could be up 1,000 pips. Right? You see where I'm at? Well, so now so let's say I'm up 1,000 pips. That's $1,700 plus $300 in interest. So I turned $170 into $2,000, and all I had to do was move my stop to break even and forget it. Well, this is actually how professionals trade. I don't know if you can fully get it yet, right? But we got to open up the head and pour this in. What if you were trading billions of dollars and you had no intention at all of earning any pips? You were just comfortable earning 100 to 200% a year in interest payments. And then you say, damn, boy, look at my portfolio. I'm up 40,000 pips. Right? If you haven't made 10,000 pips in a month, wait until you do. You're like, I made 10,000 pips this month? You're like, yeah, feels good, doesn't it? But that's how you do it, because you're in it for a long time and you just keep adding these trades. So now I can take another trade, move the stop to break even, take another trade, move that stop to break even, take another trade, move that stop to break even. Okay. So not pound Swissy, sorry, I was in a Kiwi Swissy. So I guess we need to change this. Let's do CAD Swiss. Let's get rid of CAD Swiss, Kiwi Swiss. So I'm down here, stops at break even. Came off the monthly central, trying to get some up. Give me some up, baby. Hadir wants to know about stocks. In the United States, everything's overbought. Great, right? Right? Great question. You're 6 or 7 or 8 years late. Okay? Yeah. The last stock tip I gave was buy Bank of America at $5. You know the one that really got away, and I still kick myself over it? I was kicking myself over it this weekend. Guess what I was doing? Reading Barron's, smoking a cigar. Sounds unusual for me. Anyways, smoking a big cigar, reading Barron's magazine. Right? No, not Deutsche. Citi. Wasn't Citi trading at like 89 cents? For like a week and a half, 2 weeks? And then it popped up to $3 because I think some Saudi prince loaned them $1 billion in cash, so it jumped to like $3. That thing is like $70 now. Can you imagine if you were the Saudi prince, you're like, I will buy 1 billion shares, and now he's got 60 or 70 billion profit. You're like, whoa! Dude, that's a lot of money. If you're already rich, you're like, oh man, just $1 billion? All right, I'll give you a B, and I got to get out within the decade, all right? Can you imagine turning 1 billion into 70 billion? You're like, boom, take that, Bezos and Buffett and Gates. I mean, that's Oh yeah, the Spanish stock market. So yeah. So I mean, it's a great, fantastic question. Way too late, of course. So whoever asked you to ask me, my grandmother told me to ask you. No, my grandmother asked me to tell you you're 7 years late. Right, which is what typical. Dare I say, I'm not insulting you, so I'm going to insult your friend. Typical amateur move, right? Wait for the stock market to get all-time highs and then start buying. Meanwhile, I'm waiting like, my wife's like, what do you mean you're going to Venezuela? Oh, no particular reason. Right? Yeah. Why? You want a deal? Go to Venezuela. Okay? You know, like you want a deal, buy like an Italian bank. But good luck, right? But why do you think the euro's high? Because professionals have already asked these questions last year, and they're like, what are we going to buy here in the United States? And they're like, well, everything is up. Everything. The multiples are redonkulous. There's no deals. You wanted a deal, you had to buy it 7 years ago. So now where are the deals? Well, I guess we got to go to Europe and buy some garbage there, just because we can afford that garbage. The garbage here is too expensive. So, you know, so you go to Europe and you're like, all right, everything looks bad. So we're going to try to finance this in euros because it's going to be cheaper now. And what could we buy? We need to buy something we think will be around 25 years from now. What if that was your only concern besides price? Okay, you're going to get, let's just assume you're going to get a decent price. A bank in Denmark, you know, or something, right? Or whatever. That's probably not a good example, but okay, let's just say a Spanish bank. Okay, so let's just assume price is good, especially compared to elsewhere like the United States, which is over expensive, right? So now you're going in, you're like, well, we got some problems with some debt, and we got some problems with this other thing, and the whole euro thing is in jeopardy, and okay, great. That's why you get a good price. So your real question is this bank or whatever you're going to buy, do you honestly believe it'll be around in 25 years? Despite its mess now, is it a survivor? If the answer is yes, and it's cheap, you buy it. That's it. Then you go to Italy, you're like, all right, let's find something that will be around for 25 years, but is priced pennies on the dollar. Right? Let's go to Greece, man. Let's go shopping in Greece. All right, let's start with banks, because banks make money. Great. Hello, bank. You for sale? Yeah, we're for sale, totally. We're dying. We need money. Good. Tell you what. Here's some money. I own you. I'll come back in 25 years. You better be profitable, right? And that's it. I mean, how hard can it be if your outlook's 25 years, right? If you're a scalper and you're like, wow, we got to get this to this, and then I'm cashing out. But what if you're, you know? If you can buy something for 17 cents on the dollar and hold it to maturity, you're going to be great. I mean, think about it. That's what Warren Buffett does. He buys companies that are profitable, that are going to be around 25, 50 to 100 years from now. And price is almost not even a concern. Often he drives it down and gets price. But he buys it and holds it forever. So just do that. Find something that makes money. Maybe not a lot of money now, but it'll be around 25 years. and will be making money in 25 years. So if you can get a deal now, buy it, because that's especially if you can get cheap euros. And so that's why the euro is going up, and the ECB is not doing anything to make the euro go up. It's just that you can't buy anything in the United States anymore. It's all overpriced. You should have bought it 5 or 6 years ago. You should have bought Citigroup at 89 cents. You should have bought, like I said, Bank of America, $5. $5. Delta, $5. What, the largest airline in the world for $5? Yeah, why don't you buy it? Oh, well, it's the end of the world. People were going to stop flying in airplanes. This is what people were saying. That was so funny. Yeah, you're right. You're right. Oh, yeah. No one's ever going to fly in an airplane again. That's right. This is what people were talking about. This is why I don't like people. Right? I don't like people. People are stupid. Mr. Rockefeller, yeah. So this is how you make, we're talking money now, guys. I don't know how you get me into this. We're just talking money. This is how you make money. Skip scalping. Oh, I made 12 pips. That's not how you make money. Okay. So I just tell you how to make 100 to 200% a year in interest payments. Okay. I got to stop at break even. I'm going to get paid every day, 200% a year in coupon payments. Not at the end of the quarter, every day. Every day I get paid. More money. So what if I added another one in here? And then do it again. Next week, add another one. Move that stuff to break even. And then the week after, buy another one. Move that stuff to break even after a few days. And I just keep folding in more and more and more. How many trades do you want when you get paid 200% a year? How much would you like to buy? Like, I'd buy everything. Okay, now if let's talk technicals now. Not technical trading, but technicals about trading. You'll see in a second. If you bought Citigroup at 60 cents, or I think it was 68 cents, but let's say $1 a share. You bought Citigroup at $1 a share, and it goes up 1,000% to $10 a share. It's amazing, right? 1,000%. It went all the way to $10. Yeah, it's 70 right now. All right. So, anyways, it skyrockets 1,000% to $10 a share. Great. You want to buy more at $10 a share now that you're up 1,000%? By the way, I bought Apple at $6 and sold it at like 600. I did way better than 1,000%. But anyways. All right. No, you do actually want to buy, Ron. It went up $10, especially if you plan on sitting on it for, because when I told people to buy Bank of America at $5, I told the plan was to give it to my children when they graduate from university, from grad school. Congratulations. You got your master's degree from Harvard. Great. Student loans go away. Here's your brand new house. Go get married and have kids. Compliments of Bank of America. It's all free. Here you go. Congratulations. Good job. Move on with your life. Oh, you're the greatest dad in the whole world. I know. I know. But that's the plan, right? Like literally, right? Buy it, hold it for 20 years. Okay? So here's the problem, going back to the discussion. You're up 1,000% on your Citigroup. You bought it at $1, it's now $10. Here's the problem. What if you don't have any more money? You put $1 million into this, and it's your entire net worth. So you bought 1 million shares at $1. Here's the problem. Now you have $10 million. But you have $10 million in stock. Now what? Yeah, now you have to borrow against it. But that's not really good, right? You can, but now at pretty high cost. See, in Forex is different. Okay, well, one other thought before we get into that. So you own 1 million shares of Citi at 10, which is the new high, because you just went from $1 to $10. And you want to dump 1 million shares on the market to cash out. Now what? What happens to the stock price? Is there a market for 1 million shares? And when you sell it, you actually bring the price down. Right? You might bring it down from $10 to $9 in a day. But it's not as, I mean, it's Citi, so it should be liquid enough, but it's still a concern, right? And if you did it with a much smaller stock, maybe there isn't a market for you bought 1 million shares and some guy was laughing when he sold it to you, but then when you want to get out, it's not that easy, right? I mean, literally, you're like, well, let's do 100,000 shares today and 100,000 shares next month, and and you're hoping the market goes up as you're selling, but you can't sell in a falling market. So your time, I mean, it's not that easy, right? Okay. Forex, however, is money. It's already liquid. Money is money. You've already, right? But here's the most important thing I was telling you about. In this situation where you've created a portfolio and you're earning 200% a year plus pips on top, and a pip is worth 10 times as much as the interest, your mark to market, okay, you're being paid the profit in real time. So if you're in the stock market and you buy a stock at $1 now, and now it's $10, the profit is not in your bank account. You simply own a stock, and the stock in the market is trading at $10 a share. Now you have to get rid of it. You have to exchange your stock holding, your percentage of ownership in a company, and trade that for cash. But in Forex, you're in the market and you're being paid the profit into your account in real time, second by second by second to second. And then at rollover, you're paid your interest on top of that. But every single second that the trade is moving, you're being paid or charged the loss. But it's all in real time. So like this, so I'm up $1,100. That's already profit in my account. My account's moving in real time. I'm already liquid. I'm already being paid the profit, which means I can now trade that profit. So I can build this whole portfolio of millions of dollars with only thousands of dollars, and I can trade the profit. So I'm in this Kiwi Swissy trade. I haven't cashed out. I'm in the trade, but now I can add a second one using the profits that I'm being paid on this one. Now you got to kind of average down, so you might want to move this stop up to lock in profit, which then pays for the second one. And then when you get that one, move that to just break even. Now you have true trades you can't lose money in. And now you have double the exposure, no sort of reasonable risk. I mean, you have the risk of systemic risk, but the general risk, you have 2 trades, stops are at break even, and you're doubling your profit now, partially using the profit from the first one. Now you're in the second one, move the stop break even on both, so now you have no risk, and now they're both going up, and now you're earning double the pips, double the interest. And you still have 100% of your money available. It's awesome! And if you're a hedge fund, this is a problem where you got $1 million or 1 million shares at $60 a share. You don't have the $60 million anymore. You can't really make any more trades. You're tapped out. If you want to make more trades, you kind of have to sell your winners and go out and find another deal. But what if there aren't any other deals? Now, then you go start a second hedge fund and find subscribers for that. And you're like, well, we're done with this U.S. fund, this long short U.S. equity. So let's do long short European equity. Let's do a long short EM and raise some more money with a different trading strategy. But Forex is just, you're being paid profit in real time and being paid interest every single day. Oh my gosh. It's just gorgeous, huh? Gorgeous. So I've taken too much of your time today. I'm sorry. I apologize. Yeah. Yeah. So peace on earth, may the pips be with you, may your profits be above average. My name is Wayne McDonell. I'm with TradersWay. Thank you for being on our team. Thank you for being here every day. And I'll see you tomorrow.